Alright guys, good evening once again. So this is Big Portal Academy. So the approaching the new week and the new month, month of March. Alright, so before I proceed to my trading view to show my analysis what I have for the week, earlier today I analyzed gold and I shared my view on gold. So now I first want to show us the news we should be watching out for this week. You see on Monday we only have major news on USD and AUD. So this is an high impact news. How do you know an high impact news? Once you see the color is red, you can see that means it is high impact expected. So what does it mean to be high impact expected? That means once it is around 10 a.m. if you are holding this position, if you are holding the position on USD, then the market will be very volatile. It will be very volatile. It will move very fast then. And by 10:30 we also have a news on AUD. That is RBA rate statement. You can read about it under the details. That's and the source of the news is from Reserve Bank of Australia. So more hawkish than expected is good for currency. That means once the news is positive, then it is very good for the currency. That means AUD will be bullish. So and for USD also, if the news is bullish, if the news is a good news, and if the actual after the news has been announced is higher than the forecast, so that means we expect a bullish market on USD. But if it is negative, then USD will be more bearish. Last month, February 1st, when the news was last released, it was a negative impact. You can see the actual was lesser than the forecast. So that means that period of time, US dollar was bearish. You can see usually fate actual greater than forecast is good for currency. But if the actual is lesser than the forecast, then it is not good for the currency. Alright, so now I'm moving on to the chart. So I analyzed the Euro USD last week, and I see a buy opportunity on Euro USD. I'm going to clear my chart because I'm going to do a deep down analysis on Euro USD just like I did on gold. So I'll start from the monthly time frame. Like I always say, it is always better to analyze your chart on sorry, on trading view, because you'll be missing a lot if you are doing that on MetaTrader 4 or MetaTrader 5, because you won't be able to see the old chart or the old price of the past events or past price action. And this is very important when you are doing your technical analysis. Alright, so we can see here from the past year. So all these points are very important. Alright, so that is our first resist, our first support. This is our first support, because we see when price drop down up to this point, the first thing we see on Euro US dollar is bearish market. Sellers, people started selling once price opened here, and we can see the value of euro dropped all the way down to 1.11068, and from there we can see people gain interest in acquiring euro, and euro started pushing up, and you can see it got to this point and reversed once again. So this is also a point of interest. This is a resistance. This is a resistance because people rejected the price at that point and price keep shooting down. So let me zoom in. That is why this chart trading view is very nice. I just want to be sure that I really connect my trend line to the right point. I want to be so sure. Good. So that is my 2 points. So those 2 points are very important. So now let's see what now happens after I've spotted out my resistance here and my support here. So we can see now that price broke this resistance and price keep pushing up since then. So it forms new high and new low. You can see we had a new high here and we had a new low here, and we had a new higher high and higher low. So if I'm going to draw a trend line here, so we have a trend here, and we eventually had a breakout and price kept dropping and came all the way down to respect this zone once again. Price kept ranging in here, just showing you what has been happening within this range. And we eventually have, you see now we had a fake breakout here because price kept going back. Price refused to form new highs and new lows, but later we eventually had a new highs and new low after we had eventually had a new breakout here. So we have a new high, a new low, a new high. So if I'm going to draw my trend line here, yeah, okay. So why did I choose this point? This was our last support, but price kept breaking the support and keep pushing in the more. This was our last resistance point, so that was the reason why I chose this point instead of this point or this point. So we eventually have another breakout from the trend line, and price kept pushing up. You can see price kept pushing up and came all the way to respect this zone once again. Came all the way to respect this zone again. Don't forget, this is our major support and our major resistance. Alright, so this is one of the reasons why you don't jump into trade anyhow. You don't jump into a trade that has moved already. Let's say you can see we have a breakout here. We have a breakout from this support here, and this is a support here. We have a breakout. Instead of a retest and reversed, instead of this to become a new resistance, this support still holds and price kept pushing up. So if you enter this point, then this is a good point of entry to buy. But after this candle close, and your take profit will have to be the next resistance. So after the close of this candle now, it will be very wrong to enter a buy for you to say, okay, let me catch these little pips, because your stop loss have to be below the support here, and see what happens next. Price dropped all the way down, so it gave a new opportunity for a buy here. But you don't enter trade on monthly time frame, because you can see how long these candles are, so you always see opportunity to enter these trades on lower time frames. But we use this bigger time frame to see the actual market, what is really going on in the market. So we eventually had a breakout, and we can see price has been trying to, okay, so let's see what is happening. So after this breakout, we have a new resistance here. I'll choose this point. Okay, let me use I like to use this. Good. So we have a new resistance here, and you can see we had a breakout, and price has been retesting, ranging between these points. Now eventually price came all the way down to respect the major support here, and price ranged a lot for a lot of months here, since 2nd of March all the way to April, even May 2nd, before price eventually pushed up. Alright, so now we eventually had a breakout here, and it eventually turned into a fake breakout. That is why I always say that you will always have losses in the market, but you have to control your losses. What matters is how much you lose in the market and what you also gain in the market. So that is why you have to have a good risk to reward ratio, and you make sure you enter the market at the right place and at the right time. So this, now you can see now that this eventually turned to a fake breakout, because people would have been buying from here and target is here and my stop loss is just below the support here. So for position traders now, I want to show you this nice trade for position traders. So this trade now is 1:5. That means as a position trader, if I should enter this trade, I'm just risking $165 for big lot size, but for the lowest lot size, which is 0.01, that means I'm risking $16.5 to make $89.5. But see what happens next. After we had a retest, price break all the way down and hit the stop loss. That means in this trade we had a loss. But what happens next? So I would have expected price to retest this point and price to keep pushing down, but we had no chance for that. You see, price just kept dropping all the way down and to the major support level. So now we had another opportunity to buy here once again, so you would have recovered your loss. So apart from this, now see what is happening at this point now. So price has broken this resistance and we have a retest, and this month is already closing. So there's two possibilities when market open, that this candle is going to close as a pin bar, as a doji. Reset chart, let me reset chart. It's closing as a bearish doji, and it's a retest on this point, on this resistance, which has now turned to support. So this will be a good trade to enter by. So that means this month Euro USD looks bullish. Alright, yeah. So that means if you are taking this trade, you can see the risk for position traders is just around $9, and you are aiming $89. You can see why a good entry point really matters. So even if this hits your stop loss, you wait for a good confirmation again for a retest, then it shows that price will eventually drop all the way down to this point. So it is either we target this or we target this. That is why I always say that once you enter a trade, you monitor the trade. You know what is happening on the trade before you enter any market. So we are either looking to buy or sell. Everything you do in the market is to either buy or sell. So that means here we have the option of either shorting or longing this pair, but we have greater chances of this pair that it will be long, because this month I'm expecting a bearish move on US dollar, and because of the news we have this week, so there is high tendency that US dollar will be bearish. So now let's go on the weekly time frame to see what is happening at this point exactly. Reset chart. Alright, so we can see the retest. So let's go on daily time frame again. Reset chart. Okay. Alright, good. This is very good. Alright, so we can see after the breakout here, you can see price pushed all the way up here. So I'm going to plot this out for us. So that is our resistance, and this is our support where price retraced up to. So I'm plotting that point out for us. Good. So we can see we have a rectangle pattern here. So price kept ranging within this point. We had a breakout, price came all the way down to respect this zone, and we had another breakout from the support, and price kept ranging here. So price refused to break this resistance. So now we are approaching the support level here. So that means that we have a good chance of entering this trade at the support level. So that means we set a pending order at the support here. So you see now that you see what I'm saying now. So we have a pending order here, and your stop loss will be below here, below the previous low. Do you see the reason why it is good to always do top-down analysis? So because your stop loss will reduce. So now if this should hit a stop loss with lowest loss size, you will just lose $3.7. $3.7. And if you are using a standard lot, you lose $13.7. And let's calculate our first take profit. So for those who can't all trade long, the first take profit will be in here. That is within the range of the rectangle. That is $11.2. That means you are risking $3.7 to make $11. And the next target is up here. So that is, see the risk to reward ratio. Just see the risk to reward ratio. I want to zoom this low so you can see the risk to reward ratio is 1:23. You can see how mad this is. So, and again, so if this should get invalidated, you just have to be patient. Wait. So there's possibility price will come all the way down to retest this point, the major support zone. Once again, if price should retest here, then you have another new entry at that point again. Then that means our entry point will be here and our stop loss will be below the previous structure level. The previous structure level here, and that is $5.6. And your first take profit will be around here. You can see, let's calculate the first take profit. You see the first take profit is $16. So you are risking $5.8 to make $16. You see, this still makes sense. This is around 1:3. For those who can't all trade long. And if this should also get invalidated, that means Euro will be bearish, or it can be a fake breakout. You can see here we had a breakout here. Eventually it's turned to a fake breakout. So you just have to be patient. Once any trade you take hit your stop loss, don't get too emotional about the trade. Don't attach emotions to your trades, even if any trade hits your stop loss. Just try to understand what is going on in the market. Then you wait until you have a better opportunity to short the trade, because once it hits your stop loss, there is opportunity. Make sure you stick to that, and it is always important you work with, most especially daily time frame. You don't have to sit all the time on chart. You don't have to all the time on chart. If you focus your analysis on bigger time frame, then you spend lesser time staying on chart. Since I know it will take 24 hours for this candle to play out and form my pattern or to show me a sign, then I can just wait, even do any other thing I want to do throughout the day. Like on last week Friday, I took a trade and I set my stop loss and my take profit, and at the end of the day I just checked and it's my take profit. So, and I knew exactly what next to do. Even if it's hit my stop loss, I know what next to do. So I believe you understand what I analyzed on Euro USD and where I'm targeting to enter the trade. So once market opens tomorrow, so wait for price to come all the way down to this point to retest this support. So that means we are setting a pending order here. So once it gets triggered, our stop loss is below here. That is 1.20173. That's where the stop loss will be. Then we can keep riding the trade. And again, something also got my attention here, like an inverse head and shoulder. You can see we have the first shoulder here. This is the first shoulder, and we have the head, the breakout, the head, and we have another shoulder here. So this kind of trade, this is the first shoulder, the second shoulder. So this just looked like a retest. So this should have retested this point. I took this trade actually. I took this trade and it was playing out, but once after it formed this candle, I knew it was going to reverse a bit. So I quit the trade. I got out of the trade and I'm still waiting. So if price failed to break this point, then that means this inverse head and shoulder is valid. But if price should break below this low, then this inverse head and shoulder has been invalidated. Then we have to just take our eyes off that, and that is why I don't really put much concentration on it because of this bearish candle. So that means we focus on this rectangle. Alright, so that's all on Euro USD. I don't want to make this video too long. I'll be sharing my other analysis in another video. So I believe with this you should be able to analyze the market yourself, even if not as easy as I've done here. But if you have any trouble or any problem analyzing any pair, you can always message me. I will reply you. I'll respond to your request. If you have any pair you want me to analyze or give my view on, I'll do that. And currently I'm also running my online classes, and physical classes are not currently available because I'm very busy. I don't really have the time now, but my online classes are still available, and my online mentorship. Alright, thank you so much, and thank you for watching this video, and please kindly like, subscribe and share. Thank you so much.